Have you considered selling your real estate properties off? Have you considered selling your entire real estate portfolio? Sold off almost my entire real estate portfolio. In February and March this year, 2018, I was down to 3 rental properties plus the house that I lived in house hacked. Cashed out and had a huge pile of cash that I reinvested in other avenues like exchange traded funds, ETFs, which are basically just owning small pieces of many different companies, publicly traded companies. I invested in some businesses. I did a little bit of lending. There are a whole bunch of different avenues of investing that was not tied to real estate. In spring, I got the hunger. I got the itch. I was like, oh man, haven't had a deal in a little while, guys. It's like crack for me. Hey everyone, Mike Rosehart here, talking to you guys today about why I sold my real estate portfolio off. So I did it. I sold off almost my entire real estate portfolio. In February and March this year, 2018, I was down to 3 rental properties plus the house that I lived in house hacked. It's true. I sold off over 11 rental properties. And why did I do that? So where was my headspace at in 2017 and what led up to the series of events that eventually resulted in me selling off a sizable chunk of almost my entire real estate portfolio? Well, for one, I had been grinding for 6 years building the real estate portfolio, and I had dealt with a number of concerns at a number of my properties that had kind of all come together at a head in September of 2017. And so at that time, I set out and decided I was going to sell a huge size of my portfolio off for a few reasons. One, I wanted to harvest some of those gains, take them off the table. Sort of imagine if you're playing poker and you've done very well. You want to take some chips off the table, put together that FU money and invest it in some other means of non-real estate assets, right? So that's exactly what I did. I decided that I wanted to have passive income for myself, my wife, and my daughter that was not tied at all to real estate. So what I actually did is raised $1 million cash and did a few things. One, it solidified in my mind a level of safety and freedom where I knew that no matter what happened to my real estate portfolio, no matter what happened to the real estate market, I was diversified and that I had solid dividend passive income coming in from sources not related to real estate. And it also sort of quieted some of the naysayers at the time. I had a few people in my family say, well, Mike, you're not really retired because you have a real estate portfolio. You need to experience freedom. And so I did. I took a few months off. After I sold several of my properties, I actually took a time of several months where I did a lot of gaming, a lot of traveling. As you guys know, I went out west and up to the Yukon and all back. Spent a lot of time with family. And in that time, I discovered that retirement was not something that I really wanted to do, just sit around all day. It was, for me, an active retirement is totally different than one that the traditional person might think of, wherein I spend a lot of time creating value for the world and I surround myself with a tribe of people who love financial independence, who love talking about real estate and personal finance and all of these different things. And I liked creating value and sharing that value with people. And I get a lot of reward. It feels really good when someone watches my content and says, hey, Mike, I got a lot of value from this. Or, hey, Mike, could you help me with X and Y problem? Or, Mike, you changed my life in this way or that way. It just feels like I've had a lot of success in my life and I wanted to give back. So I thought I was going to do a 180 and go from being an active, hardcore saver and real estate investor to then shifting and working as a financial advisor. And so I actually did that. I got licensed and became a financial advisor in January and February this year. All my properties closed slightly after that. And I was down to having almost no rental headaches. I had almost no rental properties. I had 3 properties that had three rental properties that had great tenants in them, and I had no issues. And I focused on getting all my licenses related to sell insurance and all of the different advising and investments. And it turns out that wasn't for me either. I actually could not handle working for someone else, working within the sanctions of a registered, as a registered financial planner. There are certain rules. I can't, for instance, create videos and talk freely about my opinions on investments or talk freely about some of the views I have on mutual funds or insurance. I can't give unbiased feedback to people over the internet. And so I was not allowed to blog. I was not allowed to, they required me to do that. So I ended up quitting because I felt there was more value in sharing this with you guys than being a financial advisor and having one-to-one conversations. I could instead have 1 to 10,000 conversations and have a bigger impact on people's lives if I wasn't regulated by the industries they prefer things to stay the way that they are. They don't want mutual fund fees, the MERs to drop. So anyway, that's what I did. And I sold my properties off and I cashed out and I had a huge pile of cash that I reinvested in other avenues like exchange traded funds, ETFs, which are basically just owning small pieces of many different companies, publicly traded companies. I invested in some businesses. I did a little bit of lending. There are a whole bunch of different avenues of investing that was not tied to real estate. So that was a big piece for me. And to this day, you guys know that I've scaled things up again. I couldn't keep my hands out of the pot. In June this year, actually even before that, in the spring, I got the hunger. I got the itch. I was like, oh man, haven't had a deal in a little while, guys. It's like crack for me. And so I went out there and I found a few different properties that really met my criteria. And you're gonna say, Mike, why did you sell your entire real estate portfolio if you've gone and bought 20 more properties, which you guys know now we're managing over 30 properties now that I'm joint vested or partnered in, or I own myself. And I personally own, I believe, 8 properties right now. So I went from 3 rentals plus my house now to 8 in such a short period of time. Plus we bought 1 per week in the corporation. So that's another, I think 12 there. So 20 properties now where I had, 3 or 4 even a few months ago. And you guys think that's a crazy quick acquisition of a number of properties, millions of dollars in real estate in such a short amount of time. But the way I see it is your real estate portfolio should not be one where you buy a property forever and then die with that property. A lot of people hold the properties based on emotional decision. And real estate investing should not be about the emotion. It should be about looking at the data, looking at the statistics and the facts. And the fact is, London real estate market was doing very, very well. Now, it did a lot better after I sold, and I probably could have made a lot more if I had held and sold in the spring instead of selling in the fall of last year and then closing in January, February. But the data was suggesting that the market was at an all-time high. Price to rent ratios didn't make sense on a number of my properties. So I sat down and I analyzed my entire portfolio. And I said, in this area, the cap rates are selling at a 6 or 7 cap rate. I should sell, and even if I want to buy back into real estate, I can go buy at a 10 or 12 cap rate in a different neighborhood in London. So I can just rebalance my portfolio. It's like if you own shares in Apple and they've gone to become overvalued, you'd want to sell them, rebalance your portfolio, and buy in companies that aren't overvalued. You don't hold properties in overvalued locations. You say, is this property worth keeping in my portfolio given market rents, given market price? So if market price and market rent relationship is not good, you don't want to own the property anymore, even if you own it outright. And in fact, another reason why I sold my properties was I went to the banks, and at that time I had over 10 mortgages, and tried to get refinances on several of my properties. And I could not do it with cheap debt. I'd had to go to lenders that like B lenders that charged me 4 and 5% interest rate. And I didn't want that. So to get access to my capital, I had to sell the property. I also had some appraisers come in that gave me terrible appraisal values in some properties. So I went and sold them. And really I should sue those appraisers because the property is sold days later, for weeks later, for almost 6 figures more than they appraised at. So these appraisers did a very bad job. A number of factors came together where I wanted to get access to my capital and rebalance the portfolio. And that's exactly what I've done. Every property that I sold, of the 11 properties that I decided to sell in late 2017 and early 2018, all of those that I've now replaced in my portfolio, the properties that I sold at the price that I sold them at, and the new properties that I bought at the price that I bought them at, I'm doing way better. Like every property that I bought, I created equity instantly. So I bought them low, and I sold my other properties, not necessarily high, but a lot higher than on a price to earnings ratio than I did on the properties that I just bought. So for instance, they were selling at a cap rate. Cap rate is basically income to price, right? Your net operating income divided by your price, right? So the price I was getting on some of my properties I was selling at say a 6, 6.5, 7 cap rate, and then I was going and buying at 10 and 12 cap rate. My new portfolio is cash flowing with less properties as well as my old portfolio did with more properties. So I've reallocated the capital in a more efficient and effective manner. So you should consider selling properties in your portfolio. And you know what, guys, if you don't love real estate, if you find that it's not passive for you guys and you're finding there's a lot of energy and effort associated with managing your properties, maybe sell that property off. I had a property that had issues with the City of London. There were some rental license issues. I didn't want to deal with those issues with the fire inspectors and the problems with those tenants. I sold those properties off. They were headache properties, and I replaced them with properties that were better fit in my portfolio. So my overall advice is consider the tax ramifications of selling over 2 years, which is what I did. I sold between 2017 and 2018. And so I split it over 2 years. Very important to do that. Don't sell everything all at once. Stagger the sales. If you're going to sell your portfolio, look at your properties that you want to sell based on the numbers. So if there are properties that aren't cash flowing very well, sell those properties first. And if you're going to buy more properties later on, make sure that you're buying at a better acquisition price than what you sold the other properties in your portfolio for. So better cash flow. And cash flow is the key thing, is what if we have a real estate crash? That's always been at the back of my mind. It's possible we may have a real estate crash. in London, Ontario, and Canada? What if interest rates rise to 6, 7%? Most rental properties in London, especially in Toronto, Vancouver, and the major markets, they just don't cash flow at 7% interest rate. The rents have to come up significantly for properties to cash flow. So in that sort of doomsday scenario, let's think, I don't know how likely that is to happen. I think probably 5% interest rate on a mortgage is a very conceivable possibility, but 7 and 8% seems a little high for the efficient market that we have today. But let's just say hypothetically it happened. Could your property survive? Ask yourself that question. All of the properties in my portfolio today can survive that. If your portfolio cannot survive that, it might be time to take some money off the table and sell a rental property. Sell that property off. If you have a property that's been paid off all the way, why haven't you relevered it? It's not a good use of your capital. Maybe you should sell it and buy several rental properties that meet the better metrics. So that's the overall message for today. You guys were hoping when you clicked on this probably that you're going to see something like, oh, Mike sold his entire real estate portfolio and there's a crash coming to London, Ontario. No, that's not true. I'm still actively buying properties within our corporation, Right Way Management. We are actively seeking deals. I'm buying average, property a week. So I am still buying, but the numbers have to make sense. Things have to cash flow. The deals I'm buying have to be 1.5% rule. There has to be really strong fundamentals behind it, that it can survive a recession. So it could survive a 10% price drop. That could survive rents dropping 10%. That could survive sensitivity analysis for double the interest rate that we're currently getting. Instead of 3%, imagine 6%. If all of those metrics are in place and you're buying smart and you're buying for arbitrage and for cash flow, then you're going to be okay. And you don't need to sell your real estate portfolio off. Unless, of course, you have enough money and you just want to retire and collect the passive income, which is kind of where I'm at. I don't rely on my real estate portfolio at all. All the growth that I'm doing, all these properties that we're buying, it's all so I can reinvest back into, it's more of a scoreboard for me. I have fun building value and I want to be able to employ people. And so that's sort of my goal, is to build a company that I can basically, it can be my tribe of folks I can surround myself with and bring friends into London. And so, yeah, that's for me what it's all about. That's why I sold my real estate portfolio. And the reason I did it, I have no regrets. Taking money off the table was a good idea. And I've invested that money and it's done very well for me outside of real estate. And I have money that's safe, that's there. So that's why I sold my real estate portfolio. And maybe you guys should consider rebalancing your portfolios too. If you have properties that don't make any sense in your overall portfolio, you need to analyze those and say, hey, this property is out of place. This area, it's overvalued now. I should sell and buy in a better area, or buy at a better price on the same street and maybe renovate it again and create some more arbitrage value. Have you considered selling your real estate properties off? Have you considered selling your entire real estate portfolio? If you have, I'd love to hear about it in the comments. If you're going to keep your real estate properties forever, I'd like to hear about that in the comments too. Why? Let's have a discussion in the comments. Have an educated discussion about why we should sell our properties, keep our properties. Do you think rebalancing your portfolio with real estate properties makes sense? If your properties become overvalued, should you sell them and buy properties in better locations that cash flow better? If you found value from this, as always, smash that like button, hit the little subscribe and the notification bell to get notifications when I drop future videos. And if you know a friend who's thinking about selling their real estate portfolio or is looking to buy real estate, please share this video with them. I would love to have them drop in the comments as well and give me their thoughts. I respond to every single comment on every single YouTube video. So if you drop me a question, I promise I'll answer it. You want to unlock a wealthier you? Spend less, earn more, and maximize your returns. Cheers. Nice. That's a wrap.